I'm 680 News senior business editor Mike Eppel. Saw a big bounce for shares of Boeing today. Stock was up more than 2% on its Wall Street listing. Bit of a surprise considering we still don't know when the Boeing 737 MAX 8 and 9 series aircraft will be back in the sky and ready to be recertified for use by airlines. And the preliminary reports from Ethiopian Airlines regarding the crash of Flight 302 indicates that the pilots of that plane did everything by the Boeing book related to how to shut off the in-flight system that was designed to prevent the aircraft from stalling, the MCAS system, which apparently malfunctioned. The pilots tried to shut that off. They did re-engage it, last-ditch effort before that plane crashed, killing 157 people. But again, Ethiopian Airlines officials telling Boeing to examine exactly that software fix and what's necessary to prevent that type of accident from happening again. Boeing still not entirely sure when that software patch will be put in, and the overall estimates of how this will dent the company's sales still a big unknown. Big downdraft on shares of Tesla today as the company issued its update on quarterly sales, and first quarter shipments for the electric car company fell 30% from the fourth quarter of last year. Now, Tesla was racing to get ahead of various tariffs placed on Chinese imports of autos in the later stages of 2018. Still, the sales of the new Model 3 were much below estimates, and there's some concern among analysts that the sales momentum for that least expensive car in the Tesla lineup has been waning. Also keep in mind that the U.S. has greatly downgraded the amount of buyer incentives for electric cars to start the year, and that also weighed on their U.S. shipment numbers. Head of Canada's biggest bank says Canada is losing ground when it comes to global competitiveness, when it comes to investing in the economy, and that is through various forms, whether it's the digital economy or even through traditional pipelines. Dave Mackay, the head of the RBC, at the company's annual general shareholders meeting today, talking about the need for new policies related to getting Canadian goods to global markets, and that includes Canadian energy exports. This has been something that has been echoed by others in the banking sector to keep Canada's economy growing, as we have seen the economy hit every time the price for oil drops, specifically related to Canadian exports of energy products. Meantime, the Canadian benchmark price for oil has seen a bit of a recovery since the start of the year, so much so that the price gap between the Canadian and U.S. benchmarks is now less than $8 per barrel. Western Canadian Select today was well above $54 per barrel, and that is following the curtailment of some of the output from Western Canadian producers, but at the same time, it means they're not making as much money if they can't get as much oil to the markets, and it still hasn't solved all the pipeline issues. From the 680 newsroom, I'm Mike Eppel for City News.